Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. Markets are down this morning and falling right now. But is it really a big deal? Really not. Not at the moment anyway. Dow here is down 246 points, 47 points, and bouncing around here, and it looks like it'll go lower. It pulled back here, and then it was in an area where it tried to stabilize. We had this little consolidation day after the wide range day, and then the attempt to go up yesterday failed and turned into a topping tail, which in of itself is one signal, of course, but then we see if it actually does follow through. Today could have turned out to be a green day, but right now it's going lower, and it just pushed through this little support area right here, and it looks like it's heading down to the next one. So the question for me, and should be for you, is does this move here, this initial move down, turn into a measured move where it actually breaks through here and some of the other indices look a little bit more ominous, meaning from the point of view of where they could go before they reach the next support. The Dow here has been underperforming, so it did not move up that much, and many times the underperformer can start to outperform, and even if that means going down less than what was stronger. For example, look at the Qs here. They had been stronger. They made a new all-time high, and then they came in and had this stabilization. So the move down to the next support reference point is quite a distance away because of the momentum move that it had and the strength. Now, that's the assumption right now, because as we look here, there's really no real support at this point. These little overlapping bars aren't going to mean a whole heck of a lot. And if we scrunch that up, you can see what I mean. This is what I call a price void. There's really nothing between here and here of significance to stop prices from going lower. When I say stop prices from going lower, I'm talking about a strong swing low where buyers came in aggressively in the past and push prices higher. So that's obviously what we call support. And when there is little to no support, and this is very little, so you can't really look at something like this and say this is of significance, and just eyeballing it, of course. When prices get there, if they stall, we'll see what they do. But this is the significant reference point here. So that's the assumption. So what we do at this point is we trade it from a bearish point of view accordingly. And I can do it from this time frame. I can move down to a 5-minute time frame now that I have time frame alignment to the downside, and I look for those price patterns and the time frames that I will be using. Now, we have to have an alternative type of rules that protects us from ignoring what is happening. And what that is our rule that we teach master traders, is that as long as this is going down, as I previously explained, we go with it. But once it forms a pivot, right, a swing low, and we have definitions for what that is, now that doesn't mean it can't go down, because that type of lower low looking for a lower high, our expectation is for it to break and continue to go down to that reference point. But what if it holds at the new reference point? Well, now it's created a stronger area of support, and if it can take out the prior swing high, well, now we've got a trend change, at least in this time frame that we're viewing, the smaller time frame. It could just turn out to be a green bar reversal in the higher time frame. But multiple time frame alignment is a major concept that all traders have to learn to use as master traders and professional traders. All right, S&P 500, you can see is going down as well. This little shelf of support there is right here. So we've got as it came down, gap down and reverse a little bit, more of a significant reference point, and then ultimately, which is right here on the daily chart, ultimately down here, which could be the measured move down to 2650 on the futures. So bonds are up here this morning. They're rallying. And where are my bonds? Right here. They've been chopping around here. They look like they're trying to form a bottom here to attempt to go up. Now, what's the big deal with bond prices going up? Well, the big deal with that is that yields come down. And here's the problem. If yields begin to drop here, or they've been going up, so they're having a correction. However, if they begin to drop, and this is what's worrying the market right now, short-term yields have been going higher. So what the market is worried about is if these short-term yields, which have been going up for quite a long time, and these 10-year yields begin to go down, which they're beginning to, and we'll see if they stabilize, but you can see that 2.839 and 1.670, still quite a distance apart, but what the market is worried about is if these two should meet each other, which would equal an inverted yield curve, and that is bearish. So that's something to keep an eye on. Intermediate term, if that should happen, you can expect a bear market. And just looking at the Russell, that's down here this morning. This is actually the ETF, but they're moving lower. And the transports actually were weaker yesterday. And let's take a look at those. They were weak, but they've been in a trading range. So it looks like the markets are going to correct a bit. We've got the possible government shutdown tomorrow, which we hear that almost every year, right? Government shutdown. As I wrote to subscribers, it's just a yawn as to how relevant that is. But good trading, everyone. Hope that helps. Visit mastertrader.com. Take a trial to our advisory letter where I update this market analysis and stock analysis and education for subscribers on a weekly basis.